talk about grains here first. Looks like beans are still leading the way higher. Well, they're the only thing that's higher. Wheat's lower, corn's lower. What has the grains starting out the week next year, Brian?
Yeah, we've got the crude oil being down so sharply. It's certainly impacting what's happening with the grains, particularly corn. Corn really seems to follow what crude oil is doing, and it makes sense because we're going to use so much energy in the form of fertilizers and fuel this year. Corn is going to have a really direct impact on what happens with the energy market. So if we have lower crude oil prices, in theory, we could have lower fertilizer costs, which would mean more corn acres. And that's why we're seeing corn lower. And if we have lower fertilizer costs, more corn acres, we might have less soybean acres. So it makes sense soybeans are rallying. So market's really playing here off of what is going to happen or what they perceive as being energy and fertilizer price. That's our main focus here in today's trade. We've kind of traded our ranges, I think, for the day in the overnight market. But unless something happens here, we're probably going to sit in these ranges. We did see some private export sale announcements this morning, both corn and soybean sales to Mexico. So it's encouraging that we're seeing some sales at least here after a couple of weeks of not having any sales at all. And our weekly export inspections were pretty good across the board, I thought.
All right, let's talk cattle real quick before I let you go. Looks like a bit of a mixed start to the day and the week here. And I think we had a cattle on feed report on Friday too. But yeah, what do you think of the cattle market, Brian?
Last week's cash cattle trade was steady. I thought that was very supportive. We kind of broke the string of lower weekly cash trade with steady market last week. Our boxes have been moving higher for the most part, although we're not selling a lot of product at a little bit higher money. It has restored the packer margins, and they're in the black here. So we expect that they'll start to increase their kills a little bit, and we've heard the JBS facility in Greeley did kill some cattle last week using non-union workers, and they feel like this is going to put enough pressure against the union that they'll get this labor shortage resolved here real quickly, and this will be a very short-term strike in JBS plants. So wouldn't be surprised to see higher cash trade maybe this week or even into next week. Cattle and feed report, not major surprises, bigger placements than expected, but compared to a year ago, it was a little bit larger at 103%. We had extremely tight placements a year ago, so not really adding to a lot of supplies. Our supplies are remaining very tight.